All right, let's dive into a company you probably think you know, but trust me, the story has changed. We are talking about Robinhood, and we're going to break down how the app you remember from that whole meme stock craze has, well, it's completely reinvented itself.
Okay, just look at this comparison because it really tells the story. On the left, you've got the Robinhood from 2021, the one tied to GameStop and Dogecoin. But on the right, that's the Robinhood of today, a company that analysts are literally calling a financial architect. So, what on earth happened in between? That's what we're here to figure out. We're going to unpack this massive pivot and what it all means.
So here's our game plan. First, we'll talk about that big pivot. Then, we're going to pop the hood and look at its new financial engine. After that, we'll get into three huge game-changing catalysts that just popped up, but we'll also cover the risks you need to watch. Then we'll see how analysts are playing it, and we'll wrap up by getting you up to speed on all the key lingo.
All right, first up, the big pivot. This is really the story of how Robinhood went from being that wild, disruptive trading app to, a much more grown-up, strategic fintech player.
And you don't have to take my word for it. This quote from a recent analyst report just nails it. The market is starting to see Robinhood not as just some place for a quick trade, but as a serious company building a really comprehensive financial world for its users.
Okay, so let's get into the mechanics of it. A new reputation is great, but the real proof is always in the numbers. It's about how they actually make their money. And this is where you can see Robinhood's business model has just fundamentally shifted.
Now, take a look at this chart because it tells a fascinating story. Yeah, transaction revenue, the trading fees, is still the biggest piece of the pie at 58%, but look at what's growing. A whopping 34% now comes from net interest revenue. That's basically rock-solid income from customer cash and lending. And another 8% is from subscriptions. These are the high-margin, predictable streams that are fueling this new, more mature Robinhood. And a huge part of that subscription money comes from Robinhood Gold. But this isn't just some little feature. It's a core piece of their strategy. By offering things like a 3% match on your IRA or a premium credit card, they're creating what's called a lock-in effect. They're making the platform so valuable that their best customers never want to leave. And all of this leads to this one really important number, 57%. That's Robinhood's score on something called the Rule of 40, which is a key report card for tech companies. You just add their revenue growth to their profit margin. Anything over 40% is considered healthy. So 57%, that puts them in a truly elite category for both growth and profitability. It's really impressive.
Okay, now for the part that's got everyone talking. All this transformation we've been discussing, it's being supercharged by three major catalysts, and all of them have hit in just the last few days. It's like a powerful three-pronged push forward. And here they are, a massive regulatory change, a brand new global push, and a move to give regular users access to one of the most sought-after private companies in the world. Let's break each one down. First up, the regulatory revolution. For a quarter of a century, this thing called the pattern day trader rule has stopped anyone with less than 25 grand in their account from trading frequently. Well, on June 4th, that rule gets tossed out the window. For a platform like Robinhood, this is like unlocking a new level in a video game. It can mean a huge surge in trading volume and in margin lending. Catalyst number two is global ambition. Just a few days ago, Robinhood got the green light to launch in Singapore. And this isn't just about one new country. Singapore is their strategic hub for the entire Asia-Pacific region. We're talking about a massive new market that could drive growth for years to come. And number three is all about exclusive access. Get this, Robinhood's own venture fund, which you can actually invest in, just put $75 million into OpenAI. This is so clever. It means any Robinhood user can now own an indirect piece of a dream asset like OpenAI, not to mention other giants like SpaceX and Stripe. That's access that used to be only for the super rich. It's a huge, huge competitive advantage. So you've got this new, stronger financial engine and three massive catalysts all firing at once. The momentum feels pretty incredible, right? But hey, every story has two sides. So you have to ask, what could possibly go wrong? And that brings us to the risks. Look, no investment is a sure thing, and it's absolutely crucial that we look at the other side of the coin, the bear case for Robinhood. There are really two main things to keep an eye on. First, there's a legal fight brewing in Wisconsin over a new feature called prediction markets, which lets you bet on real-world events. The state says it's basically illegal gambling. And second, even with all their new income streams, the company is still pretty exposed to the wild swings of the crypto market.
another crypto winter could definitely put a dent in their earnings.
So, how do the pros weigh all this? The good, the bad, the exciting, the risky? Let's take a look at the analyst's playbook to see how they're putting a price tag on this new version of Robinhood.
Well, they've basically mapped out three paths. The base case, where things go more or less as planned, puts the stock around 115. But in the bull case, if that trading rule change really lights a fire under the stock, they see it going as high as $170. Then there's the bear case. If those legal issues get worse or crypto tanks, they think it could fall back to around $65.
Okay, before we wrap this up, let's do a quick fire lingo round. Knowing these terms will really help you understand the whole picture here.
First, that pattern day trader, or PDT rule. Just remember, it was the old rule that required a $25,000 minimum for active traders. Getting rid of it is a huge potential tailwind for Robinhood's core customers.
Next, a closed-end fund, or CEF. All you need to know is it's a special type of fund that trades like a stock. And Robinhood uses it as a clever way to package up hard-to-buy shares in private companies like OpenAI and let anyone trade them. And finally, the Rule of 40. Think of it as a quick health check. You add a company's growth rate to its profit margin. If it's over 40%, things are looking good. Robinhood's 57%, well, that signals they're operating at a truly elite level. I think this last quote really sums up the whole transformation. Robinhood's original mission to democratize finance hasn't disappeared. It's just gotten bigger. It's not just about trading anymore. It's about giving everyone access to a complete, high-yield financial ecosystem.
So, to wrap it all up, Robinhood has built a brand new, more stable engine. It has three powerful catalysts pushing it forward. It really has evolved into this financial architect. So the only real question left is this: can they actually execute on their ambitious new blueprint? We're definitely going to be watching. Thanks for tuning in.